Welcome to Market Finance, your daily piece of finance info. Hello, and welcome to my channel. Today we will be taking a look at the 2025 stock market crash and why it happened. In 2025, the global financial markets took a hit, a big one. Stocks plummeted. Tech giants lost billions in value. Retail investors were blindsided. So what happened? Was this predictable? And more importantly, what comes next? Let's rewind. The cracks were already showing at the end of 2024. Inflation had cooled slightly, sure, but core economic fundamentals were still shaky. The Fed was stuck between a rock and a hard place. Cut rates and risk inflation again, or hold them high and choke growth. Meanwhile, the AI boom, which carried tech stocks for nearly 2 years, was starting to fizzle out. Overvaluation? Oh yeah, companies with zero profits were trading like they were the next Apple. Add to that, skyrocketing consumer debt, a shaky commercial real estate market, and geopolitical tensions that kept investors on edge. Yeah, it was a recipe. So what sparked the crash in early 2025? A few key things lit the match. First, a major U.S. regional bank collapsed in January due to overexposure to commercial real estate defaults. Deja vu of 2008. Anyone? Second, China's GDP numbers came in way lower than expected, shocking global markets and tanking investor confidence. Third, a wave of earnings misses from big tech, including some of the Magnificent Seven, wiped out trillions in market cap overnight. It wasn't one big event. It was a slow-motion pile-up. Each headline hit harder than the last. By March, the S&P 500 had dropped over 25% from its 2024 highs. The Nasdaq? Even worse. Investors panicked. Hedge funds took major losses. And retail traders, many of whom entered the market during the COVID era, were left holding the bag. Crypto wasn't spared either. Bitcoin tumbled below $30,000 as liquidity dried up and risk-off sentiment took over. Some analysts called it a correction. Others called it collapse. But whatever name you use, one thing was clear. The 2025 crash shook investor confidence to its core. So, what really caused the 2025 crash? The first reason, overconfidence in tech. AI hype led to bubbles and unrealistic valuations. The second reason, policy lag. Central banks underestimated how long it would take for rate hikes to impact the real economy. The third reason, debt overload. Consumers, corporations, and governments were stretched thin. The fourth reason, black swan events. Bank failures and global slowdowns created shockwaves. It wasn't a single mistake. It was systemic. A cocktail of risk, over-optimism, and delayed consequences from the post-COVID money printing era. So where do we go from here? Some say this is the Great Reset, a chance for markets to find real value again. Others fear it's just the beginning of a larger downturn. Here's the bottom line. Market cycles are normal. Corrections are painful, but they can also be opportunities if you're smart, patient, and well-informed. Diversify, stay calm, and maybe log off of Reddit once in a while. What do you think caused the 2025 crash? Was it avoidable or inevitable? Drop your thoughts in the comments. Don't forget to like, subscribe, and turn on notifications so you don't miss our deep dives on the economy, investing, and financial news that actually matter.